Crypto news: Binance and its CEO Changpeng Zhao sued by the CFTC. You can like and leave comments for more cryptocurrency news and Bitcoin news. You can access all altcoins from the link we left in the description section. Binance, the largest crypto exchange, and its CEO Changpeng Zhao are facing legal action from the U.S. Commodity Futures Trading Commission, CFTC. According to the charges, Binance allegedly violated several trading and derivatives regulations. The lawsuit cites CEO Changpeng Zhao and former compliance officer Samuel Lim. Could the news of the complaint to Changpeng Zhao and Binance put the crypto exchange in trouble? The CFTC is a regulatory body charged with protecting market participants and the public from fraud, manipulation, and abusive practices in the derivatives and futures markets. The lawsuit filed against Binance alleges that the exchange allowed U.S. customers to trade derivatives without being registered with the CFTC, which is a violation of federal law. The complaint assumes that Binance allowed U.S. customers to trade on its platform from at least June 2019 to June 2021, without properly registering with the CFTC or implementing proper anti-money laundering and know your customer procedures. Another charge is that the exchange allowed customers to trade derivatives that were not properly registered with the CFTC, including digital asset futures contracts. More specifically, the complaint is also directed at Binance's former chief compliance officer, Samuel Lim, who facilitated the exchange's violations by providing false and misleading statements to the CFTC during its investigation. The CFTC alleges that Lim provided inaccurate information about the number of U.S. customers on Binance's platform, and failed to disclose that the exchange allowed U.S. customers to trade derivatives. The lawsuit seeks civil monetary penalties, permanent trading bans, and restitution of ill-gotten gains. The charges against Binance come as regulators around the world are increasingly scrutinizing the cryptocurrency industry and its potential risks to consumers and financial stability. The complaint alleges that for much of the period in question, Binance did not require its customers to provide any identity verification information before trading on the platform, despite the legal requirement that entities like Binance that function as futures commission merchants, FCMs, collect such information and fail to implement basic compliance procedures designed to prevent and detect terrorist financing and money laundering, the CFTC explained on Monday. The broader industry suffers from allegations against Binance. Binance has not yet issued a public statement in response to the lawsuit. However, the exchange has faced regulatory challenges in other jurisdictions in recent months. The allegations against Binance highlight the need for greater regulatory oversight of the cryptocurrency industry. While some argue that excessive regulation could stifle innovation and growth in the industry, others argue that it is necessary to protect consumers and ensure that the industry operates safely and transparently. Regulators around the world are grappling with regulating the cryptocurrency industry, which operates across borders and is not subject to the same level of oversight as traditional financial institutions. Some jurisdictions, such as China and India, have taken a strict approach to regulating the sector, while others, such as the United Kingdom and Switzerland, are taking a more measured approach. Although the outcome of the case against Binance is uncertain, it is clear that regulatory scrutiny of the cryptocurrency industry is increasing. The industry will need to adapt to meet these challenges and ensure that it can operate in a safe and compliant manner. Following the news of the CFTC's lawsuit against Binance, the entire cryptocurrency market lost 2.94% against the US dollar. Bitcoin, BTC, fell below $27,000 per unit, and other major cryptocurrencies such as Ethereum, ETH, and Binance Coin, BNB, also suffered losses. The CFTC's enforcement action represents a significant development in the ongoing regulatory crackdown on the cryptocurrency industry. The agency has stepped up efforts to regulate the industry in recent years, and this enforcement action against Binance is a clear indication of its willingness to take strong action against companies that violate its rules. In a note, CFTC Chairman Rostin Behnam said, "Today's enforcement action demonstrates that there is no position, or alleged lack of position, that prevents the CFTC from protecting U.S. investors. This statement suggests that the CFTC is committed to enforcing its rules and protecting consumers, regardless of the size or importance of the company in question." The civil monetary penalties, permanent trading and registration bans, and compensation sought by the CFTC are significant and could have a major impact on Binance's U.S. operations. If Binance is found to have violated CFTC rules, it could face significant financial penalties and restrictions on its ability to trade in the United States. This could have a ripple effect on the entire cryptocurrency industry, as other exchanges and companies could be forced to comply with stricter regulations or face similar enforcement actions. The CFTC's legal action against Binance is just one example of the commitment to regulatory scrutiny of the industry, and we are likely to see more enforcement actions in the coming months and years. In response to regulatory scrutiny, some companies in the cryptocurrency industry are taking steps to improve compliance and address regulatory concerns. For example, Coinbase, one of the world's largest cryptocurrency exchanges, recently announced that it is working with regulators to obtain a banking license and become a fully regulated financial institution. Although the regulatory environment for the cryptocurrency industry is uncertain, it is clear that companies that prioritize compliance and work with regulators are more likely to succeed in the long run. As the industry continues to evolve, it will be important for companies to stay abreast of regulatory developments and adapt their strategies accordingly.